Hello from the Dukascopy TV studio in Geneva. We are back with our weekly technical analysis with Jean-Francois Owczarczak from the Management Joint Trust here in Geneva and their product FinGraphs.com. Jean-Francois, welcome to the studio.
Thank you, Daniel.
So we have a correction up of the euro. The question, of course, now is how much potential lies in this correction, in this counter trend?
Okay, well, we're going to have a look at it. We're back on our FinGraphs.com website with this mosaic, this hourly mosaic that we use for this Dukascopy show. It gives the perspective over the next few weeks. And we have here Euro-Dollar, Cable, Euro-Swiss, Gold, Dollar-Swiss, Dollar-Yen, Brent, and the S&P Future. So let's first focus on the Euro-Dollar with this investor's view. An investor's view shows the perspective over the next few quarters with this weekly chart, so 1 point per week, over the next few months with this daily chart, and over the next few weeks with this hourly chart. And last week we had downtrends all across the board on the weekly, the daily, and the hourly, and we didn't want to anticipate the anticipation, so it's still quite defensive on the euro. Yet with the speech from Janet Yellen, we've seen quite an acceleration of the premises of the correction up we had been seeing, and we are now moving up into our targets for this correction. We will first analyze the longer term, so the weekly. The weekly for us, so the perspective over the next few quarters is still heading down. We still have a bear trend here, and our targets, which lead us between 113 and 102, have not been fulfilled yet. There's still a bit of time to go. So we believe that the euro downtrend should continue probably until mid-year and still has some potential down. On the daily, we had reached our impulsive 2 targets. Indeed, we were even well past them. We actually came down below 105. And hence, the move was in an overextension. We had stress on our envelopes, with both envelopes touching each other, as well as our risk index, which was well in the overbought. And hence, the reaction is coming out of a situation which was in an exaggeration. At the moment, the trend is still heading down, although its potential may be exhausted. So when we focus on this correction up, we now need to focus on the relevant time horizon, and the relevant time horizon is here the hourly. The move is quite rapid. That means that we've made it up into our corrective targets very, very rapidly. The upper end of these corrective targets are around 109, which we are at the moment. And if we were to move above this resistance level, we could then make it into impulsive mode. And if we calculate an impulsive target, it probably brings us back between 111 and 112. So at the moment, we're just on this strong resistance. We think there's probably a bit of work around here. We will see if this breakout is confirmed. The machine doesn't confirm it quite yet. And if so, targets are between 111 and 112 over the next week. That said, the daily trend is still heading lower. The weekly trend is also still heading down. So we remain negative on euro-dollar over the next few months and over the next few quarters.
So switching to gold, there has also been a correction up. What does your system FinGraphs say?
Well, a very similar story. So if we go into the investor's view here, again, a weekly, a daily, and an hourly. The weekly is still in a downtrend. It still has time and price potential to the downside. If you see here, the risk index is not even in an exaggeration. Targets are between 1,200 and 1,000, which, if we take an average, it probably results in a target in the direction of 1,100. So that would probably be the potential until mid-year at least, with still some time left in the time projection here. The daily is still heading lower. We believe it could make it between 1080 and 1140. We did see some exaggeration last week with the 2 envelopes touching each other here and the risk index in the overbought. And since the current reaction up is not coming out of the blue, yet there's still price potential down and there's still time to go. So we believe that at the moment this correction up is only temporary, and markets, well, gold should resume its downtrend in due course. Then again on the hourly, we've seen this reaction up since mid last week. It has reached our corrective targets, so it is also against the resistance level which is given by the upper boundary of these corrective targets. They stand at 1191. If we were to make it above these levels, we could trigger an impulsive target up and possibly envisage that we would move back above 1200 up to 1220 over the next week or so. But at the moment, this breakout is not confirmed yet. The move has indeed been strong, but the daily and the weekly are still in downtrend, so we'll keep our medium to long-term negative stance on gold for now.
If we look to the equities, though, there has been a consolidation on the European stock markets. The dollar is the reason for this?
Yes, it is, because the European stock markets had been very strong on the back of euro weakness. What was interesting is that on the reverse side, the US stock markets had seen a consolidation on the back of US dollar strength. It's interesting to note that and it actually started early last week, but with the correction down on the dollar, we could see that equity markets in the US are resuming their uptrend. And so now we're back in three bulls. So a weekly trend which is still up, targeting impulsive two targets, so extended targets, up into the 22 to 2400 levels over the next few quarters. The daily still sees some potential over the next few months, up to 2100, which we have already seen, or where we are at the moment, up to 2185. And the hourly has resumed its uptrend, and we could expect over the next week or so the S&P 500 to move back above 2120, possibly up to 2150.
Jean-Francois Owczarczak from the Management Joint Trust here in Geneva, thank you very much for being here today.
Thank you, Daniel.
And thanks for your interest. You also find interviews and analysis at the website of Dukascopy TV. Have a great day and see you next time.